we need to talk about like losing trades, because whenever you go aggressive, like Max said, he's gonna get assigned more. And a lot of people don't have a plan, and they just can't be aggressive without a plan, or else that defeats the purpose of being aggressive. We want to start off the program selling like 15-day, 30-day CSPs, hitting a 95% win rate, hitting 5% a month. Like that's your first goal. But then you want to go to 10% a month, and you want to find that CSP that does like 20% a month, or maybe 20% over 3 months. And that's where you're going to fail more, obviously. So how do you recover from a failure? How do you not marry yourself to a failure? Like, how do you let the aggression work the most in your favor? And you have to cut losers. Like, there's no way to stop. Like, you have to be able to do that. Like, that skill set is more essential than finding the aggressive trade.
Is that why you're profitable in December? Because that was astonishing to me that you...
Yeah, I cut 60 grand of losers. 40 grand was a Tesla. I got into TSLQ too early. Yeah, I cut 60 grand of losers. So I thought to myself, like, well, it's less about teaching people to be aggressive, but more so teaching them to realize when they were wrong and when they should be out. Because a lot of people, even at the 6-figure table, they're probably in a lot of things that in a bad market could have gone the other way, and you would have had to cut. But because we had a good market, they didn't have to learn that skill. So everyone has to learn that skill, even the 6-figure earners. And on average, I would say like everybody should be able to cut 5 losing trades a month. Like that should be your goal. You should find 5 trades in your portfolio, maybe even right now, that just don't make sense. And like you should be proud to cut it. I had to work with a couple students and convince them that cutting was a better path. And it was like such a hard thing to grasp for them. Like they did not want to cut. Like it was so hard. It was like, abandoning one of your children. Yeah. So
Will you share this out after this?
what I'm gonna do is I'm gonna retape all these, teach it in my computer at home, and put it in a course for you guys. So yeah, this slide deck will be private, mainly for seminars, I believe. So you won't get the slides, but I'll teach this stuff in the video format at home. Basically, you're in a trade, it starts losing bad. You're in CSPs, they're deep in the money, like TNA. You're in leaps in stocks, they're down 30%. Like this is the moment you analyze the trade and say, what am I gonna do? Because it's gonna get to that point where you have to do something. And you can't get to this moment of like 30% down on a leap and in the money on a CSP and just hope. Hope that you're gonna average down on the CS, or average down, I guess, on both, and it's gonna work out. Or hope that you're gonna get assigned and it's gonna work out. Like, or we're removing hope today. No more being down and hoping. We have to have like a analysis and a framework for a losing trade to run through, to really stop hoping and either recognize the game plan, recognize if it makes sense, or finally cut it. And it's like, when you're dating somebody and they're about to break up with you, and you have a attractive person in your life you're maybe excited to date after. You're looking at a trade like you want to be excited to leave that trade, and you want to find an attractive one somewhere else. Like that's the best framework when you're in a loser. Like, get excited about the breakup. I don't know another analogy, but that's what I think is like, oh, I'm excited to exit because this trade's gonna be a quicker profit. It's gonna be more. I'm gonna make back my loss, and sometimes a lot more. So when these trigger, your analysis has to start. That's when you start start having to run through these things I'm showing you here. So when this happens, when the trades go this red, it's hard to go green. Like there's a point in a trade where it's just against you from a stock perspective, and it's gonna be hard to make money. And so you don't want to be holding in that condition. And it's typically these 4 conditions, maybe all of them are present, but the daily clouds, I added this recently. Like we've seen it with stocks sold, the daily clouds are all red. Everyone's been saying, Matt, why are you always selling CSPs on Soxel? Daily clouds are all red. Yeah, that's a valid point. And I'm good with what I do, so I can make money in a trend like that if the macros are in favor like Soxel. So yeah, that's going to be tough. So if you're in a trade and they all are red on the daily, that typically means it's going to take 30 to 90 days to flip any 2 clouds, unless there's earnings. And we do ETFs because we're not like Christopher. We don't want to be around earnings with single stocks. But it's hard to flip daily clouds. Like, so when you see them like all red, you might have to be stuck in a losing trade longer. So if you spend 3 months in a losing trade and it keeps sucking your money down, if you got out, you're not getting sucked down, but you're having your money make 5% for those 2-3 months. So it's a massive threshold of profit swinging. Consider the stock down 5% every month. You're down 10% at the end of it. But if you didn't have that and you were making 10%, it's a 20% swing off of like a 60-day period. High time frame sweeps, like the indicator shows it. It's not something like you guys have to drive yourself mad trying to figure out what a sweep is. Like just click on the indicator, click on the bear sweep, look on the monthly and weekly chart. It's not good. So like if you see that happen, it's going to take, if it's on the monthly, 3 to 6 months to sweep back. Weekly, like 3 to 6 weeks. So think about this as like a 3x time frame. So, if you see that weekly sweep, it's going to take many candles to bull sweep. And that's when the sweep is done, basically. Bear sweep, bull sweep, that's the full move. And then we start beginning the bullish momentum. But when you see the bear sweep happen on a high time frame, it's just going to drag down the market for a long time. And we consider a large move hard to retrace. That's like what Christopher said, like institutional buying, like when a huge candle pops up. And that's when we know there's momentum, there's volume, there might be institutions. So you can't reverse that quickly. So if your trade, I don't know, like the Fed starts talking, things don't look good, the market that's a big move, like instantly key reversal recently that happened. And that's why I'm bearish on the markets. Like it's not going to be easy to reverse that recent move. So that's another threshold. You got to look at your charts and say, do I want to hold this trade? Because it's going to take a lot longer to get that momentum flipped. Also, key levels. If you're selling puts at a key level and it breaks the key level, your thesis is broken. Like you were hoping that level was your level. It wasn't your level. Like just be honest. Like that's the market sometimes. It blows through a key level. Either you're fresh to the system, it's a crazy market, but you got to understand that level needs to hold for your thesis to hold. And for you to go back through the level, it's not going to be easy. So nail's been a nail in everyone's heart too. Key level 115. I know a lot of people that was trying to sell at that level. Blew right through it. So not a good sign. You want to look for candles to close under the level as confirmation. Because look at this 90 level. We're not today, but we're holding I guess 82. This is a make or break moment for our system in our strategy, because if we hold that and sweep it, that's what triggers our system. But if we break down and close under it, it's going to go to the next level. So there's only rare scenarios where it'll go through a level, come back, and kind of fake you out with that like 1-2 sweep type thing. But it's a red flag if you break through levels. So again, if we look at our reasons to close a loser, daily clouds, boom, bearish on nail. Monthly, any type of monthly sweeps. There's one there, it's a local sweep. There's one here, and it's a 1-2 sweep. That's a long wick sweep. No bull sweeps until here. So bear sweep. That's going to tell us it's just hard to make money on the upside. So two reasons to not be bullish on nail. Hit a 15-30% drop recently. That's like any type of weekly candle that dropped that much. There's 10, there's 15, there's another 20. I mean, there's no reason to be bullish when you see that much momentum down. What you want to see is momentum up that way. So you always got to flip it around to get bullish. Like any of these things being true for bullish is a reason to hold things, maximize them, sell aggressively. So flip your thinking also to use this and execute. But remember, the system is the reason why we get in, but when the system's opposite, it should be a reason to get out. This isn't a flawless system. The market could go do anything sporadic. So when we coach you guys to take more risk, you got to be ready to know when to call it.